What's going on, everyone? It's Chidima, and welcome back to the channel. Now, if you're looking to build long-term wealth and generate passive income, dividend investing is the strategy for you. And today, we're diving deep into the world of dividend aristocrats and dividend kings, the cream of the crop when it comes to consistent dividend payers. By the end of this video, you'll have a list of 10 rock-solid companies with juicy dividend yields above 3% that you can consider adding to your portfolio for 2025 and beyond. So, buckle up, smash that like button for the YouTube algorithm, and let's get started. Alright, kicking off our list, we have Johnson & Johnson, a true titan in the healthcare industry. This company has a storied history and a reputation for reliability and innovation. Now, J&DJ has been around for over a century, and they've been consistently increasing their dividend for an incredible 58 years straight. That's a testament to their robust business model and commitment to shareholder value. That's right, for almost 6 decades, J&DJ has been rewarding its shareholders with a growing stream of passive income. This kind of consistency is rare and highly valued in the investment world. And with a current dividend yield of 3.2%, you're looking at a solid return on your investment. This yield is particularly attractive in today's low-interest rate environment. Plus, their payout ratio of 50% means they have plenty of room to continue increasing that dividend in the future. This low payout ratio indicates financial health and sustainability. I mean, we're talking about a company with a diversified portfolio of products from consumer healthcare to pharmaceuticals and medical devices. This diversification helps mitigate risks and ensures steady revenue streams. They're a cash flow machine, and that's exactly the kind of stability you want in a long-term investment. With their strong financials and strategic vision, Johnson & Johnson is well positioned for future growth and continued success. Next up, we have another dividend kingpin, Procter & Gamble, a company that has been a household name for generations. Now, if you've ever used Tide detergent, Crest toothpaste, or Gillette razors, you're already familiar with some of their most iconic products. These products are just a few examples of the power and reach of PG's extensive brand portfolio, which includes dozens of other well-known names. I mean, these guys are the undisputed champions of consumer staples, dominating supermarket aisles and household cabinets around the world. And when it comes to dividends, they don't disappoint. P&G has a long history of rewarding its shareholders. With a 64-year streak of consecutive dividend increases, P&G is a true dividend king, a title that few companies can claim. That's more than a lifetime of dividend growth, providing financial stability and peace of mind for generations of investors. And with a current yield of 3.1% and a payout ratio of 60%, P&G continues to be a reliable source of income. You can sleep soundly at night knowing your P&G dividends are safe and likely to keep growing, thanks to their strong financial health and consistent performance. They're essential products people always need, no matter what the economy is doing, making P&G a cornerstone in any long-term investment strategy. Now, let's talk about a company that needs no introduction: Coca-Cola. This beverage giant has been quenching our thirst for generations, and their dividend history is just as refreshing. With a 59-year track record of consecutive dividend increases, Coca-Cola is a dividend king with a thirst for rewarding its shareholders. And check this out, their current dividend yield is a tasty 3.5%, making it an even sweeter deal. Of course, their payout ratio is a little higher at 75%, but hey, it's Coca-Cola. They've got brand recognition and global reach like no other. People all over the world love their Coke, and that's not changing anytime soon. Alright, sticking with the beverage giants, we have PepsiCo, Coca-Cola's biggest rival. But here's the thing, PepsiCo is more than just sugary drinks. They've also got a massive portfolio of snack foods like Lay's potato chips, Doritos, and Quaker Oats. Talk about diversification. And when it comes to dividends, PepsiCo is no slouch either. They've been consistently increasing their dividend for 49 years straight, making them a dividend aristocrat with a long runway for growth. Their current yield sits at a respectable 3.1%, and with a payout ratio of 65%, they've got a good balance between rewarding shareholders and reinvesting in their business. Now let's shift gears and talk about 3M, a company that's all about innovation. From post-it notes to scotch tape and industrial adhesives, 3M's products are everywhere. And just like their products, their dividend is sticky. With a 63-year history of consecutive dividend increases, 3M is a true dividend king that's built on a foundation of innovation and consistent growth. And their current dividend yield, a juicy 3.8%. That's right, 3M is not afraid to reward its shareholders for their loyalty. Plus, with a payout ratio of 55%, they've got plenty of room to continue increasing that dividend for years to come. Alright, who doesn't love a good McDonald's run every now and then? But here's the thing. McDonald's isn't just a guilty pleasure, it's also a dividend powerhouse. With a 45-year track record of consecutive dividend increases, those golden arches are a symbol of consistent dividend growth. And their current yield? A tasty 3.2%, making it a delicious addition to any dividend portfolio. Now their payout ratio is a little higher at 65%, but hey, it's McDonald's. They're a global fast food behemoth with a loyal customer base and a knack for adapting to changing consumer tastes. Chapter 7. Colgate-Palmolive. Brushing up on dividends. Next up, we have Colgate-Palmolive, the company that keeps our smiles bright and our dividends flowing. From toothpaste and mouthwash to soap and pet food, Colgate-Palmolive's products are staples in households worldwide. And their dividend history is just as impressive. With 58 years of consecutive dividend increases, Colgate-Palmolive is a dividend king that knows how to take care of its shareholders. Their current dividend yield is a solid 3%, and with a payout ratio of 60%, they've got a healthy balance sheet and plenty of room to keep those dividends growing. Chapter 8. AT&T, the telecom titan with a hefty yield. Now let's talk about AT&T, the telecommunications giant that's been connecting us for decades. And in the world of dividends, AT&T is a true heavyweight, boasting a 36-year streak of consecutive dividend increases. That's right, AT&T is a dividend aristocrat that's as reliable as a phone call. Well, most of the time. But here's the kicker. Their current dividend yield is a jaw-dropping 7%. That's right, 7%. Now their payout ratio is on the higher side at 65%, but AT&T is a cash flow machine with a massive subscriber base. They're not going anywhere, and neither are those juicy dividends. Chapter 9. ExxonMobil, fueling your portfolio with dividends. Alright, let's dive into the energy sector with ExxonMobil, one of the world's largest oil and gas companies. Now, ExxonMobil has been around for over a century, and their dividend history is just as long and impressive. With 38 years of consecutive dividend increases, ExxonMobil is a dividend aristocrat that knows how to reward its shareholders through thick and thin. And their current dividend yield? A hefty 5.5%, making it a gusher of passive income. Plus, with a payout ratio of 50%, they've got plenty of room to keep those dividends flowing for years to come. Chapter 10. Chevron, another energy giant with dividend power. And last but not least, we have Chevron, another energy giant that's committed to delivering value to its shareholders. With a 33-year track record of consecutive dividend increases, Chevron is a dividend aristocrat that's built to last. And their current dividend yield is nothing to scoff at, coming in at a solid 4.5%. Plus, with a payout ratio of 55%, Chevron has a healthy balance sheet and a commitment to returning cash to its investors. So, if you're looking for a reliable dividend payer in the energy sector, Chevron is definitely worth considering. Outro, build your dividend empire. And there you have it, 10 top-tier dividend aristocrats and kings with juicy dividend yields above 3%. These companies have consistently rewarded their shareholders with increasing dividends year after year. Investing in these reliable dividend payers can help you build a rock-solid investment portfolio for 2025 and beyond. Imagine the peace of mind knowing your investments are generating steady income. Remember, these companies have a proven track record of dividend growth and financial stability, which is crucial for long-term wealth building. This makes them ideal for long-term investors looking for both growth and passive income. The combination of capital appreciation and regular dividend payments can significantly boost your financial health. But as always, diversification is key. Spreading your investments across various asset classes can protect you from market volatility. Don't put all your eggs in one basket. Diversify to minimize risk and maximize returns. Spread your investments across different sectors and industries to minimize risk and maximize returns. This strategy ensures that your portfolio remains resilient in various market conditions, and most importantly, reinvest those dividends. Reinvesting allows you to take full advantage of the power of compounding. Let the power of compounding work its magic and watch your wealth grow exponentially over time. The longer you stay invested, the greater the potential for growth. If you enjoyed this video, don't forget to give it a thumbs up. Your support helps us create more valuable content. Subscribe to the channel for more investing tips and strategies. We regularly share insights to help you make informed investment decisions. And hit that notification bell so you never miss an upload. Stay updated with the latest trends and opportunities in the market. Thanks for watching and happy investing. We wish you success on your journey to building a prosperous dividend empire.